Hey, good morning. Let's go over today's trade plan. So in the overnight session, for the most part, the market continued to balance within a range. And at this point, heading into the open, although the buy side is a little more active off the non-farm payroll report here, we are still technically trading within a balance until the market either breaks out above 88.75 to 90.75 or breaks down below 75.5 to 78. In between, the market can still remain range bound. So our bias on the day, the short-term bias, continues to be neutral, and we are going to have to assess the situation in real time and see how the market responds to 88.75 to 90.75 off the open, and then determine whether the buyers are indeed in more control or whether the market is just continuing to balance within the recent range. So on the upside, we know that we need to see broad market strength and sustained upside momentum in order to get a breakout above 88.75 to 90.75. If the buyers can break ES above that zone, then we can test 94.5 to 96.5, the all-time high at 98, and potentially probe to a new all-time high. On the downside, we have the aggressive area of support at 83.5 to 85.5, and we would have to see some strong internals in order to consider going long at that zone, because the only situation where a long setup works at pre-market support is if we're seeing excess strength in the market that can still lead to an upside breakout. Below that, we have the initial support zone at 75.5 to 78. That is really the significant area of support on the day time frame. It marks the bottom of the current developing balance area, and we know that in order to break down below 75.5 to 78, we would have to see excess weakness, the AD line at quite a negative value and trending lower, and the tick holding below zero and printing some significantly lower values as well. So 75.5 to 78 continues to be key support on the downside, and 88.75 to 90.75 is going to continue to be the main inflection point on the upside. Until we break out of that range, the market is still technically stuck in a balance, but once we break out above initial resistance, then we have a confirmation that the buyers are in control, and at that point we want to focus more on the long side and be conservative and cautious on the short side. Now looking at the econ calendar, the main catalyst this morning was the non-farm payroll. We don't really have much going on for remainder of the session, and then we have the French elections this weekend. So today could be another fairly muted session. We'll just have to assess that in real time. So even if we break out beyond initial resistance, we don't necessarily have to put in a big breakout beyond the 23.98 all-time high. So the market may test that area, and it could quite easily test 94.5 to 96.5, but we don't necessarily have to put in a major rally heading into the weekend, given that the French election is a potential risk point. And if we fail to take out the 88.75 to 90.75, then we could continue balancing within a range and head down towards 75.5 to 78, and then depending on what the situation looks like as ES is testing 75.5 to 78, we'll have to determine whether there's potential for a breakdown or whether the internals are fairly muted and we can just continue to balance within the recent range, perhaps breaking out or breaking down after the French election heading into next week. So those are the main ideas heading into the open. Again, our short-term bias continues to be neutral, so we are going to have to be flexible and nimble with our real-time intraday bias and then see how the situation develops in real time. So those are the main thoughts. Let's see how the market responds to 88.75 to 90.75, and we'll take it from there.